I'm now, okay, forced to ask you, right? Slippages, the Q3 slippage ratio, right, is at 0.39% if I'm not wrong, and slippages have come in at 3,823 crores. So, well, it doesn't look too bad. Rajesh, now can you opine on SBI?
Neeraj, broadly, stock was consolidating in range of 740, 780 band since last couple of days. Now there is a volatility because of numbers. So stock is almost negotiating with its 20-day moving average. Stock was trading above 20-day moving average, but the early reaction post number is now back to the 20-day moving average. Put-based concentration is based at around 750 strike. So I think 750 should act as a immediate support area. Almost we are trading near to those level. So if it slips below to 750 mark, then some unwinding trade may take place, and then possibly stock may go down to the next support area of 735. But looking at the overall structure, I believe that selling would absorb at these level only, and if at all the stock crosses above 765 to 770 zone, maybe we may witness some short covering action because the call concentration is immediate call concentration. The major is placed at 770. So any move above 770 may trigger short covering, and then stock may extend its gain towards 790 to 800 zone also. So those who are risk-taking traders can initiate long position with very small stop loss of 745.
Okay. So, well, that's the trading call. And by the way, that stock has bounced back a little bit as well, because I think the slippages number, Harsh, at 0.39%, if the slippage number is 0.39, that is actually better than what the street may have been penciling in.
Very, very strong, in fact, Neeraj. Maybe at least 10 odd percent, at least 10 to 20% lower than what the street would have ideally penciled in. And so on two fronts, it's a beat for sure. One is your credit cost number is lower, and that's largely likely led by some amount of write back which has happened this quarter, it seems. And then the other piece is that your slippages number is lower. But Avinash Gorakshakar also joining us, Director Research at Profitmart Securities. Avinash, how's the SBI number looking to you? Operationally weak. In your view, what's led to that weakness with regard to the operating profit?
No, I think clearly my sense is, numbers are much lower than what the street expected. I think we'd like to hear, what is the reason for the, reason for the slippages to increase, and more importantly, what's the kind of outlook on the growth commentary for the coming quarter and the coming year. But I think numbers are weak, and I think ideally, this is definitely going to lead to some weak the stock in the near term.
Sunny, it's interesting. I'm just trying to, Avinash does believe that it's slightly weak, but the slippages number looked very good, like 0.39%. The slippage ratio is not very bad, right? So what is your sense here? I mean, PSU banks in general and SBI in particular after this kind of a performance?
Yes, definitely. I think if slippages number are lower than street expectation, definitely positive. And just I was going through result press release also. I think it's the treasury income. When you see a segment-wise number, so treasury income is something which has gone down significantly on Q-on-Q basis. That is the reason. That may be due to some reason. We may need to check from management what is the reason for that. Apart from that, I think all the segments seems to be doing well on Q-on-Q basis. So I think inline set of expectation as far as SBI is concerned.
Yeah, but